Early queues outside Silicon Valley Bank in branches in California and also in Manhattan. Fears of banking domino. Customers rush to withdraw their deposits. And I'll again remind you that you can also see my videos on my Patreon channel because of the fact that there are some sensitive topics that I don't upload on YouTube, and you'll benefit from that definitely. Now, going back to this, Silicon Valley Bank collapses on Friday morning. Yes, Silicon Valley Bank collapsed on Friday morning after a nightmarish 48 hours in which a massive bank run and lack of capital led to the second largest collapse of a financial institution in U.S. history. Allison Morrow and Matt Egan, CNN, report. Meanwhile, dozens of bank customers lined up to withdraw cash on Friday. In footage posted on Twitter, customers can be seen lining up at the entrance of a branch in Bay Arena in Menlo Park, California, in torrential rain. There were similar scenes at other branches of the bank, including in Manhattan, where panic reached such a point that building manager at SVB's office called the police after a group of disgruntled tech customers showed up at the doorstep in an attempt to withdraw her money. And obviously, I guess they didn't want all these people making a bank run. California regulators shut down the tech-focused financial institution and placed it under the control of the U.S. Federal Deposit Insurance Corporation. The FDIC now acts as a trustee, which usually means that it will liquidate the bank's assets in order to repay its customers, including depositors and creditors. Now, I wonder if this will spread to other banks. The FDIC, an independent government agency that insures bank deposits and oversees financial institutions, said all insured depositors will have full access to their insured deposits by Monday morning at the latest. It also said it would pay uninsured depositors a preliminary dividend within the next week. The bank, formerly owned by SVB Financial Group, did not respond to CNN's request for comment. The trouble started on Wednesday, when Silicon Valley Bank said it had sold a branch of securities at a loss and would sell $2.25 billion in new shares to shore up its balance sheet. This caused panic among the main venture capital firms, who reportedly advised the companies to withdraw their money from the bank. Silicon Valley Bank's stock tumbled on Thursday, dragging other banks along with it. By Friday morning, its stock had ground to a halt, and it had abandoned efforts to quickly raise capital or find buyers. Several other bank stocks temporarily halted trading on Friday, including First Republic, PacWest Bancorp, and Signature Bank. The FDIC's mid-morning intervention Friday is notable, as the agency typically waits until the market closes to intervene. SVB's situation deteriorated so quickly that they could not wait another 5 hours, wrote Better Market CEO Dennis Kelleher. He said this is because its depositors withdrew their money so quickly that the bank immediately became insolvent and an intraday shutdown was inevitable due to a classic bank run. Silicon Valley Bank's collapse stems in part from the Federal Reserve's aggressive rate hikes over the past year. When interest rates were close to zero, banks filled themselves with long-term, seemingly low-risk bonds. But as the Fed raised interest rates to fight inflation, the value of those assets fell, leaving banks sitting on unrealized paper losses. Higher interest rates are hitting the technology sector particularly hard, depressing the value of stocks and making it difficult to raise capital, Moody's chief economist Mark Zandi said, and this prompted many technology companies to withdraw their deposits with SVB to finance their operations. Higher interest rates have also reduced the value of the Treasury and other securities that SVB needed to pay depositors, Zandi said. All of this led to a decrease in their deposits that forced the FDIC to take control of SVB. The U.S. Deputy Treasury Secretary Wally Adeyemo on Friday sought to reassure the public about the health of the U.S. banking system following the sudden collapse of SVB. He said federal regulators are paying attention to this particular financial institution, and when we think about the broader financial system, "We're very confident in its ability and resilience," he said. Adeyemo told CNN in an exclusive interview. The remarks came after U.S. Treasury Secretary Janet Yellen called a meeting of financial regulators to discuss the collapse of Silicon Valley Bank, SVB, a major lender to the troubled tech sector. She said, "We have the tools necessary to deal with incidents like what happened at Silicon Valley Bank," Adeyemo stressed as well. He said the U.S. officials were learning more information about the collapse of Silicon Valley Bank. He argued that the Dodd-Frank financial reform overhaul, signed into law in 2010, have regulators the tools they need to address such gave regulators the tools they need to address such issues and improve bank capitalization. However, Adeyemo declined to predict what, if any, impact there will be on the wider economy or the tech industry after the collapse of this bank. Echoes of 2008, despite initial panic on Wall Street over SVB's collapse, analysts said the bank's closure is unlikely to set off the kinds of dominoes that hit the banking industry during the financial crisis of 2008. The system is as well capitalized and liquid as it ever has been, Zandi stressed. Banks in trouble are too small to pose a significant threat to the wider system, he said. But smaller banks that are disproportionately tied to cash-strapped industries like tech and cryptocurrency could face problems, according to Ed Moya, senior market analyst at Oanda. Moya said everybody on Wall Street knew that the Fed rate hike campaign would eventually break, and right now it's destroying small banks. Temperamental states, although relatively unknown outside Silicon Valley, SVB was among the top 20 U.S. commercial banks with $209 billion in total assets at the end of last year, according to FDIC. So it was among the 12 top 20 commercial banks. It's no small bank. It is essentially the largest lender to fail since the collapse of Washington Mutual in 2008. The bank partnered with nearly half of all venture-backed technology and healthcare companies in the United States, many of which pulled their deposits from the bank. Mike Mayo, senior banking analyst at Wells Fargo, said the crisis at SVB may be, quote, an idiosyncratic situation, end quote. He said it's night and day compared to the global financial crisis 15 years ago. This is what he told CNN's Julia Chatterley on Friday. He said back then banks were taking too much risk and people thought everything was fine. Now everyone is worried, but underneath the surface banks are more resilient than they were a generation ago, he said. SVB's sudden collapse mirrors other dangerous situations that have developed in the market over the past year. Cryptocurrency-focused Silvergate said on Wednesday it was winding down operations and liquidated the bank after financial devastation from the turmoil in digital assets. Signature Bank, another lender, was hit hard by the bank sell-off, with shares plunging as much as 30% before trailing on volatility on just yesterday, Friday. SVB's institutional challenges reflect a larger and more widespread systemic issue. The banking industry is sitting on a level of low-performing assets that, thanks to the last year of rate hikes, is now very underwater and sinking, wrote Conrad Alt, co-founder of the Claris Group. Alt estimated that rate hikes have effectively wiped out about 28% of all capital in the banking industry by the end of 2022. That's about 30%, about a third. And this is from Depositors. I've translated this for you from a Greek article. Please leave your comments and thank you for your support. Kindly support my Patreon account. The daily posts are 5 videos daily, and they are totally different from what I have on my YouTube channel. Thank you so much for your support and that you find all my content so interesting. You'll find the Patreon account details in the description box